Hey everyone, and welcome back to Everything Tesla Stock. While inflation and supply chain crisis keep taking their toll on the EV market, Tesla continues to make positive moves to keep its head above the water. A lot's been going on with the American car maker recently. But amidst the challenges, the company continues to record increasing numbers in sales and stock price. Although for most investors this may be the perfect time to increase their holdings on Tesla shares, popular TV host Jim Cramer thinks otherwise. According to Jim Cramer, this may not be the ideal time to ramp up shares. In fact, he's actually warned Tesla holders to sell their Tesla stock before August 30th. Why has Cramer said this? Well, let's find out. Before we start though, if you like this type of content, don't forget to like and subscribe, and also turn on notifications for the channel to never miss anything going on in the world of Tesla. Jim Cramer is an American TV host and investor, popular for his show, Mad Money, which has been airing on CNBC since 2015. Some of his stock picks on the show made listeners invest lots of money, but definitely not all of them. Regardless though, Jim isn't scared to give his opinion on different stocks, including Tesla shares, out to the masses of viewers he'd accumulated over the years. In the past, actually, Cramer was a founder and manager of the multi-million-dollar website Cramer Berkowitz Hedge Fund, as well as the co-founder of a financial advising website, TheStreet.com. He's also a well-known author writing about money, stocks, and how to get rich. From what is known, Jim Cramer is a big fan of the stock market, and no doubt, a Tesla enthusiast. But with his recent warning on Tesla, which has raised some dust among investors who follow him, and have known him to become quite a strong Tesla bull. According to Cramer, Tesla investors should start considering selling their Tesla stock rather than keeping it for the long term, but it's quite unclear what he has to say about Tesla. But it could be said, judging by his recent statements, that Cramer fears the worst coming up for the EV company. Let's find out why. In a recent interview, Cramer revealed his new optimism around Ford. This came after the company announced plans to nearly double the annual production capacity of its upcoming electric F-150 pickup truck to 150,000 units per year by mid-2023. According to Cramer, Ford is now going into the production of inverters and batteries and is likely to produce 200,000 battery vehicles by 2020. He also added that Ford has gone ahead of Tesla when it comes to pickup trucks, in the past and maybe in the future. Also noting Ford have already had successful production lines pumping out vehicles fast. And although Tesla is expanding its factories, it's suffering growth pains, whereas Ford has already had big car production factories in place for years longer than Tesla. Shares of Cramer's supposed new fan company, Ford, surged roughly 10% to more than $24 earlier this year, as they hit a fresh 52-week high. Cramer said that the sky is the limit for Ford this year, and he further recommended viewers buy Ford's F-100 Lightning all-electric truck, an electric version of the iconic American pickup truck. In similar news, Cramer also criticized Tesla's Cybertruck and stated that this was Elon Musk's first flop. It's an unusual statement given the fact that Cramer's always been a huge fan of Tesla's big projects. Also, even though Tesla's Cybertruck is yet to be released, there is already a lot of hype and pre-sale orders going about already. So this is something long-term that a Tesla bull should be excited about, but that is not the case with Cramer. So what could have caused this? Well, Tesla's been battling with inflation challenges. The EV maker recently reported a smaller than expected drop in quarterly profit, which, according to Tesla CEO, was caused by a string of price increases for its cars. Musk described the price hike in Tesla cars as being embarrassingly high, and added that further, without proper measures, this could hurt demand for its vehicles. Musk believes that a company cannot raise prices to some arbitrarily high level because it passes the affordability boundary, adding that this could also cause the demand to fall. Tesla's raised prices several times in the last year. The price of its Model Y long-range version is now $65,990, up more than 30% since the start of 2021. Musk added that Tesla's got a lot of supply chain and production shocks, and then there is also the inflation hitting the global market. According to the CEO, he had expected inflation to start easing by the end of the year and most commodity prices to stabilize, which will eventually allow Tesla to cut prices ever so slightly. But things don't seem to be going in that direction. That's been a major concern for Tesla's enthusiasts just like Cramer, especially after Musk said he had a super bad feeling about the economy. Likewise, production at Tesla's gigafactories hasn't really been as expected. According to Morgan Stanley analysis, Tesla's earnings are beginning to experience near-term margin downturns due to the challenges with increasing production. According to Elon Musk, Tesla does not have a demand problem, but rather a production problem. Although the CEO claims new factories in Berlin and Texas are expected to produce 5,000 cars a week by the end of the year, and Tesla is still pushing to reach 50% growth in deliveries this year, the company revealed that this target has become more and more difficult. No doubt, Tesla is constantly thrilling the automobile industry with amazing new innovations and production targets, but on many occasions as well, it's reported the inability to meet up with deadlines and release dates due to several market challenges, especially with regards to supply. This has been discouraging for Tesla fans who constantly look forward to its projects. This is also one reason Cramer believed that Ford is gradually taking Tesla's place in the industry, and investors might not want to sell their shares before the 30th of August if he is right. According to him, Ford has a few challenges regarding its supply of chips, and that's it. Something most EV companies, including Tesla, are currently struggling with. While speaking at a conference recently, Elon Musk revealed that it's been a supply chain hell for the company. The company's executives have also acknowledged some continuing tightness in supplies of older generation microchips. Tesla's vehicle deliveries fell 18% from April through June this year. This is owing to several reasons, one being the recent shutdown in the company's Shanghai factory, which affected the over 40% sales quota at the factory. Likewise, Tesla has not been able to increase production at its new factories in Austin, Texas, and near Berlin, as Musk had earlier claimed it would. But the projects have been receiving huge investments with little production results. So it's fair to say that Cramer's concerns at this point are quite valid. Also, the EV industry is becoming quite competitive, and many companies are trying constantly to keep up with Tesla. Kia and Ford Motor gained significant market share, while Tesla lost ground in the US. And that's a major concern, as it could signal something big coming for Tesla. It is not surprising, though, that these supply chain challenges are gradually affecting Tesla's finance. The company's total revenue fell from $18.76 billion to $16.93 billion, signaling a possible downward trend in the company's finances and most likely its stock. One other big piece of news that could be a sign of Tesla's financial difficulties is the sale of its majority stake in Bitcoin holdings. Tesla had converted approximately 75% of its Bitcoin purchases into fiat currency. Looking at the current state of the cryptocurrency, the company obviously bought at a low price considering the decline of the crypto market. According to Musk, the sale was made to increase liquidity following the uncertainty of whether the China lockdown will be eased. So could Cramer be right by suggesting that investors are going to sell their shares? Well, one can't say for sure, as the stock market is never certain, and the recent quarterly result released by the company could make one think otherwise. According to Laura Hoy, an equity analysis at the investment firm Hargreaves Lansdown, Tesla's problems are mostly short-term, and profits should improve in months to come. The EV company recently released its financial results and shareholders' letter for the second quarter of 2022, and judging by the numbers, it could be said that Tesla has managed to beat expectations on both earnings and revenue despite a difficult quarter. The company reported revenues of $16,934 billion and earnings per share of $2.27. It also increased its cash position by $0.8 billion to $18.3 billion in the quarter, which caused the stock prices to increase by 4%. Tesla says that it continued to make significant progress across the business during the second quarter of the year, despite many challenges. Although this is lower than Tesla's profit in the first quarter of the year, approximately 1/3, it is an achievement in itself. Tesla's a fast-growing company, and from the records, it's executed several groundbreaking projects in the past. The EV company's dominated the industry for years, topping most of its competitors multiple times in the charts. It's not surprising then that the company is affected by market challenges, as no company is immune to this. So judging by Tesla's long-term valuation based on this, well, it may not be ideal. However, this is not to say that Jim Cramer is wrong about his opinion on Tesla. His statements are probably based on statistics and previous economic cycles, seeing that he's been in the business a long time. But going by the performance history of Tesla, it's safe to say that the company is always on top of its affairs and constantly seeks ways to overcome its obstacles. So it is most likely that this will not be any different, and Tesla's stock may still go higher in number. But then again, the stock market is always volatile, so buying or selling any stock should be based on your own personal conviction. What do you think? Should investors sell or hold onto their shares? Let us know down below, and while you're still here, go ahead and click on one of these two videos on your screen. See you there.